Are you struggling to find financing on a property through an A lender and a B lender and you have no other option? Well, today I'm going to be sharing more information about private lending and what this may mean as a consumer. Hi, my name is Lyndon Crain. I'm a mortgage broker with Dominion Lending Centers. Let's jump into it. First and foremost, what is private lending? Private lending is a short-term financing solution for those who may need temporary financing before they sell a property. They have a property that's in poor shape that the bank or a B lender will not touch, or you have poor credit, so you're unable to get approved with traditional lenders, or maybe you're self-employed and you're not claiming enough income on your tax returns and an A lender or a B lender will not approve you. We have a solution through private lending, but I'll be honest, it's not always the cheapest. Private lending rates depend on the loan to value and your overall credit profile and income. Typical private lending rates can be between 10 to 12% and as low as 7%, 5.99, depending on the loan to value. By loan to value, I mean how much of a loan is secured to the property versus the property's value. So if you have $1 million home and you have a $500,000 mortgage secured, your loan to value would be 50%. And in that case, we can receive discounted rates. On the other side, if you have a property that's worth $1 million and you're looking for a private loan of $800,000, your loan to value is 80%, and chances are your rate will be higher because there's more risk to the lender and you have a high loan registered to your property. So it's more risky. If the lender has to put you in a position to sell your home because you're not making payments, they have greater risk of losing money on the property, especially if home values have depreciated and now there's not enough equity to cover closing costs, plus the existing mortgage, maybe some mortgage arrears, and so on. So it can be more difficult for that lender to receive the entire $800,000 back. Now, aside from escalated rates, private lending also comes with fees. Typically, it's 3 to 4% of the loan amount. And this can change. So some lenders will let us do reduced interest rate on the mortgage and higher fees, or lower fees, higher interest rate. As an example, you could do a 10% interest rate plus 3 to 4% in fees, or you could do an 8% interest rate and 5% in fees. It all depends on how the lender is willing to structure it and what makes sense for you as a consumer. So if we're doing a refinance and you're not looking to pay the lending fees out of pocket, but you have more equity in your home, we could always take it from the fee from the refinance, from the equity, and lower your interest cost per month. Now, anytime you're accessing a private lender, you do have to pay for their legal fees plus your own. Typically, it's about $4,000, $2,000 each side, $2,000 for the private lender's legals, and $2,000 for your own. On top of this, you'll also be responsible for an appraisal, which can range, depending on the property, from $300 to $1,000, depending on the number of units. Other costs could include admin fees that the lender is charging. It could include an interest adjustment. There's also fees if you're requesting a payout statement or an annual statement for your mortgage with the lender. Just be careful of some of the hidden costs and make sure that your mortgage broker is informing you of all costs. As you can see, private lending is very expensive. And anytime a broker is putting you with a private lender, it always has to be a short-term solution. Your mortgage broker should be discussing what is an effective exit plan to leave that private lender 6 months to 1 year from now. Some solutions could be improving your credit. It could be claiming more income on your tax returns. It could be fixing up the property that's in poor shape so that a bank will now finance it because the security is strong. Your mortgage broker should be building you a plan on what needs to be done 12 months from now to exit the private lender, because in most cases, private loans are interest only. You will not be able to get ahead on your mortgage payment. You will not be able to get ahead on building equity in your property because you're paying interest only every single month. Now, some private lenders do offer amortization periods. So you can take a 40-year amortization or even shorter with that lender at their discretion. So if you wanted to pay a small portion of principal every year, you may have that ability with your private lender. Private lending could be a solution for you. It's fast, usually less paperwork, but it's not for everybody. If you are curious if private lending makes sense because you've been unable to get an approval with a traditional A lender or B lender, give me a call. I would love to discuss your file and see what works best for you. Give me a call, 226-787-4745. Look forward to hearing from you.